Hey everybody, Joe here from Avalon Accounting, and today we're breaking down the anatomy of a profitable $1 million service-based company. Now, why did I choose $1 million? Well, number one, the math was easy, but also $1 million tends to be where real profitability can happen within any business, service businesses included, and also it tends to be where you can cover all those expenses and have some good profit left over. But what I'll be doing is breaking down line by line what your income statement should look like, and it's going to be in percentages. So even if you're not $1 million business, maybe you're bigger than that, maybe you're smaller than that, you'll be able to apply these percentages to your own business. What this video is covering in some senses is a component of that successful business that I always talk about. What's a successful business? It gives you lots of money, it gives you time so you're not overworked, and it gives you purpose. Now this video is really covering a lot in the money aspect, so how to become profitable and have money left over, but also I'll be delving into a little bit of the time aspect as well. So all that and nothing else coming right up. Cheers. All right, so number one is that even though you're a service-based business and don't have a lot on your balance sheet, what I'd like to start with is that your balance sheet still matters. We're going to be covering the income statement a lot, but I want you to really consider that the balance sheet is important, and I'll tell you why. Number one is that your brand trust will not show up on your balance sheet in dollar format, but it's still there. It's behind the scenes. So that's what you create every time you have a good marketing campaign, every time you deliver a great service to a customer. Any of those things that happen there are going to add to your balance sheet, are going to make you a more valuable business. Number two, the processes that you create are also on your balance sheet, but they're just not showing up in dollar format. Again, they're behind the scenes. So this really does matter. You do need to create processes in your business. And just because maybe take you some more time or are a bit of an expense on your income statement doesn't mean you shouldn't be paying attention to them. So really important to create processes every time that you do, and it makes it easier for somebody else to do something later, is adding efficiency. That is balance sheet work, and it's really valuable. Number three, with low staff turnover and customer turnover, you're going to be more profitable. You're going to have more information and education in your staff and in your clients behind the scenes. That's going to add to your balance sheet again and is really important. It's not something that's going to show up in your income statement. It might actually be a bit of a drain on it, but that doesn't mean you shouldn't spend money in these areas. So I just wanted to cover those because some people can get so focused on the profitability and the income statement side of their business that they neglect to start building up these assets on their balance sheet side, especially because they're not in dollar form on the balance sheet. It might seem like a waste of time, but let me assure you it is not. You should invest in your balance sheet in terms of keeping good staff, keeping your clients happy, building processes, and being more efficient. Those are all on your balance sheet. They're just not showing up directly. All right, so let's get stuck into it now. So how do you benchmark for profitability? Now, in this document that I've created, I've kind of broken down all the categories, what revenue should look like, what your direct costs and all those elements should be. You can go through that and see the comments within that. You can download that document down below. But I'll go through one by one and we can delve into what this should look like and why it's there and some of the pitfalls of each one. So number one is revenue. Okay, so this is the common denominator, and I don't mean that in just a random saying. It is the common denominator throughout. So when we divide any expense by revenue, we get a percentage. And the bigger that revenue number is, the percentage will come down. If there's ever any expense side that seems too high of a percentage, it can be just an issue with revenue size. So just keep that in mind as we go through, that revenue is a component in any one of these percentages. And if you can grow revenue, that means that percentage expense will decrease. All right, so your number one and very, very important expense is your direct labor. That is the money that you need to spend in labor to produce the revenue that you're getting there. It's really critical, and I'll do a separate video on this, is how to get this really humming within your business. But it is important that you need to keep a really close eye on this And if you make some mistakes in this area, it can really expand on the problems in your business. So making sure that you have efficiency within your business, that you're billing out everything that you should, and that you keep your sort of salary cap for your revenue that you're producing really in check is super important, because everything else is going to fall from here, and your gross profit number is directly a result of how productive you can be in your direct labor. All right, in the next section, I'm going to cover all the overheads. So overheads tend to be the things you need to do just to keep the lights on and the doors open in your business. But I think one of the things that I see commonly here is people trying to really reduce this as deeply and as severely as they possibly can. I'm going to warn you against doing that, because you should be spending money in your overheads. It is a part of running your business. Turning the lights off just to save a few dollars might really hurt your staff. So you don't want to be, saving a bit here and causing a real problem over there with each sort of expense cut. So the number one category, and probably one of the bigger ones, is management and admin people. And why this is so big is it tends to be a portion of your salary, especially at $1 million, and especially smaller than that, is that you're going to be doing as an owner a couple of jobs in your business, if not, a lot of jobs in your business. But we're going to separate those into two main categories. One is the production work that you do, the billable work, and the other is the management of your business itself. So you want to break up these two things and put part of it into overheads and the other part into your direct labor. You don't have to be super scientific about this. I think you kind of judge how many hours you're doing in each, and then separate the amounts by a percentage and just stay consistent with that. If you ever need to adjust, you can adjust if you're doing less production work and more management work. But just acknowledge that there is a part of your salary that's an overhead, and that there's a part of your salary that's production. On the administrative side, I would say a good admin person will raise the level of all your production staff. So if you have somebody in the background kind of helping out with all the unbillable stuff and cleaning that up, that's going to free up your production staff to do more efficient work. So just keep in mind that you don't want to underspend in this category. It is still really important to consider your administrative salaries and making sure those people are really productive in a sense, but maybe not necessarily billable. All right, next is facilities. And I don't care if you are a bricks and mortar kind of place where you have an office with doors and the whole bit, or you're a remote distributed team. You're going to have to spend money in the facilities part. And what I consider this to be is, where do people come together? How do they work together? And how do they have a place of employment that they want to keep coming back to? So again, you don't want to be cutting this expense if you are a remote distributed team and you're saying, hurrah, I don't have any rent to pay. Well, that can be a real problem if you're just saving in that area, because if you're not giving the staff reasons to keep coming back and feeling happy about the place that they work, then that can be a real issue as well. So there are some very specific issues with remote working that bricks and mortar may not have, and vice versa. But especially remote working is that they can feel disconnected. So you do need to invest some money here to help make sure that people do feel connected to the team and that they feel connected to their work and their working environment. So don't just cut this expense, keep a good healthy budget there. Also don't overspend. All right, next up is software. And this is one I think, can enable your team to be really productive, can really support that production team, but can get out of hand really quickly as well, because what you're going to see is that you sign up for these great programs. They're going to charge you monthly fees. Maybe they're $10 here, $8 there, $20 there, but they can really add up. So I think one of the things to take away from this is, yes, you need to spend in the areas that you do. I think it's worthwhile spending money on software and not trying to go free version for everything. But you also want to monitor this and get a report maybe once a quarter to review what you're paying for software-wise, and make sure you stamp out any software that you're not using anymore, because it can just get out of control. All right, next up is marketing. And this is a fun one because you can play with this a little bit depending on how profitable you want to be at any given time in the cycle of your business. How much do you want to grow? What I've put here is 5%, but that could easily be 10 or 15%. I wouldn't go necessarily too much below 5%. Some people will do their own marketing as the owner. They'll spend their time doing it. That doesn't mean it's free. It just means you're spending your time on that, and that's okay. But make sure you know that you're doing that because you're really good at it and not because you're trying to just save money. I kind of consider this expense to be a bit of the balance sheet side. It's a bit of an investment, but it's also, can't really be recorded that way, so we put it on the income statement. But it is necessary in order to grow your business or even maintain your business. You're going to lose clients, but you need new clients to come in. You need to have brand recognition. You need to be, current with what's going on out there. So make sure you are spending some money or time in this area and that you're not under investing in your marketing. I do see that quite a bit. Also, being cognizant that if you are growing, this number may be higher. You may see lower profitability and you could play into 10-15% because you're really trying to grow your business quickly. All right, next up is finance. Obviously, personal favorite of mine. You want to spend some money in here. Unfortunately, it's just it kind of is an expense that's just necessary. There's compliance costs of filing tax returns and making sure your bookkeeping's up to date and all that kind of good stuff. But you can do a little or a lot for this budget. So you can get out there and spend $20,000 and just get a tax return because your books are a mess. Or you can really leverage a good team. And here at Avalon, what we try to do is keep an integrated team, a bookkeeping and accounting team together so that we can not only do the compliance work, but sort of what falls out of that is really good information that you have consistent reporting so you can actually judge these percentages for yourself and see where you need to make adjustments. So just something to look at proactively is how much you're spending there. Don't try to cut this expense too much. That might sound a little self-serving, but I have seen it a lot, and sometimes I wish I could be a little more pushy with our value as finance people. But just something to consider. You do want to invest in this area. You do want to get good value for money, of course, but you don't want to underinvest in your finance function because it is so important. All right, the next one is general and admin. I think it's just more like a capture-all for all the rest of the things that you need to spend in your business, maybe office supplies, maybe insurance costs, all the things that tend to be inevitable in your business. You definitely want to keep an eye on this, but it doesn't tend to be a make or break sort of situation. So it is kind of down at the bottom, but something to keep an eye on. And lastly is depreciation. So this is your sort of hardware cost. You buy a computer for, well, I don't know what Apple's charging these days, $4,000 for a computer. That's going to last hopefully 5 to 8 years, something in that range, depending on the kind of work that you do. But there is an element to this that is income statement related because that asset is going to have to be replaced eventually. So we just want to keep tabs that there is an expense related here. Maybe it's not $4,000 in 1 month, but it is also important to keep track of this as well. All right, what I would like to add to this is all these elements, all these expenses should work together. And what they're trying to work together to achieve is, yes, balance sheet value in your business. You want to be spending money in the income statement areas more so to create the value in your business, but also to support the direct costs of production labor. You want your production team to be efficient, to get work out really well, and all these expenses in the overhead side should support that in some way. So you look at depreciation or hardware costs. Do you have current computers that your staff can actually do their work on? Or is it old and decrepit hardware that they can't do what they need to do? Is there marketing things where are you getting enough clients? Are you increasing your revenue so that you can cover, say, your rent that smaller percentage? You need higher revenues for that, so marketing supports that. Admin, you want to be spending money in admin to free up your production team to really focus on their production work and billable work. If you have a good admin person, they're going to free those people up. So every element here should support your production labor and your balance sheet and create a valuable business. And that's where sort of time comes into it. The more that you can do this and the more empowered your team is and more knowledgeable they are and experienced that they are, the less you'll have to work as an owner. I see it all the time with service-based companies is the owner is doing so much production work and filling in all the gaps here and there that they're working 60, 80 hours a week and not really getting the results for it. So what I would say is that all these elements have to work together in order to not only give you profitability, but also free up some of your time as well. All right, so that's all fine and dandy. The real question you probably have is how do you get there? Well, the first step in all of this is to understand where you are right now. You cannot bridge that gap when you don't know where you're sitting at the moment. So it's really important to have good reporting, good consistent reporting each month or each quarter, and be able to evaluate how much you're spending in each one of these areas. That's point number one. Point number two is, where are you going? So I hope this document helps you to sort of understand where you could go with your business and how you would get to around 20% profitability. But it's really about bridging the gap. So the next step is to get actionable steps into how do you either increase revenues. Again, that's the common denominator. And if you can increase revenues and keep all your expenses the same, you're going to see those percentages come down to the right levels. But there's also tactical things that you might need to do. And this doesn't come easy. This is where you need to try some different things. But at least by knowing where you are and where you're going, you can start to try out things and see how they affect your percentages on each one of these expenses. The other point that I'll make here is that accountability is absolutely crucial to getting this done. So you can have all the information you want. You could have the tactics in place, but without accountability and someone holding your feet to the fire and someone you have to report to, it can all fall very quickly. You're busy, you can do production work and get paid a certain amount per hour that you're working on that. It becomes very hard to say, okay, the most important thing I need to do right now is to focus on this tactic to get general and admin costs back down to a certain percentage. So it's really important to have reporting timelines, and then where you need to meet with somebody that's going to hold you accountable to the tactics that you said you would put in place. Whether that's an accountant or a mentor or a coach or whatever, it really is imperative to get some outside eyes on your business, somebody that you trust that knows your business really well. But I can't say it enough that it really is critical to get somebody here, because we can let ourselves off the hook all the time. All right, so in the next video I'm going to do is I'm going to break down the production labor. So there's a lot to dig into to how to get to 50% production labor. It doesn't happen just by waving a wand. There's a lot that goes into that. So I have a capacity planner that I'll share with you and how we structure production labor here at Avalon. In the meantime, just any questions that you have, please post them below. If you got some value out of this video, please hit the like button. Would really appreciate that. And if you want to get notified for that next video that comes out, just subscribe and hit the bell, and you'll get notified when that comes out. So a lot more of these videos coming out. Really excited to be putting these videos out for entrepreneurs like you, and really thank you for all your support of the channel. And again, please hit any questions down below in the comments, and I will address them either in there or maybe on the next Q&A session. We'll see how much time I get. But again, thank you so much, and we'll see you in the next video. Cheers.